Hello, good evening. Let us start the session. Today is the third session we are going to start. Today we will discuss some of the previous 2 days, whatever we have done, little bit exercise we'll do. Please mute yourself. Some background noise is coming. Please mute. Whenever you want to discuss, please discuss with me by unmuting. Okay. So this session, as I told you, today we are discussing about the previous 2 sessions, briefly about the exercises we'll do first. Then we'll go to the treatment of exports and imports under GST, because GST is very important aspect in respect of the export and imports. Both GST applicability is there. So we'll discuss about the GST and also especially about the export refund under GST. What are the provisions? These things we'll discuss. Okay. And first we have discussed about starting the business, then what to export, where to export, how to get export orders, then fulfilling the export orders, then payment realization. These are the 6 steps we have discussed briefly, of course, but each of these things with details also we are going now. Okay. First one, the establishing the business and I think we have discussed as first what are the different types of businesses are there. Then opening the PAN number is a mandatory requirement, and also IEC number and RCMC from the EPC concerned. These are the some of the important aspects we have discussed. And today, of course, we'll go further about the IEC from the DGFT, how to get. Of course, bank opening and PAN numbers, of course, we are not discussing. These are very fundamental, every organization must have. IEC code onwards will start. Then IEC code, how to get from the DGFT, what are the important documents you have to submit, and what are the other provisions about the IEC will discuss. Then RCMC means registration cum membership certificate from EPC, means export promotion councils. So what are those export promotion councils, how to get our relevant export promotion council, then commodity boards. Then of course we will discuss about the GST registrations and little bit we'll discuss. Then we'll go for the entire GST related subject will go. Today, as I told you, little bit of practice will do, means where you will get all these details. For example, for IEC code, how to search, where to go, means DGFT site where it will be available, all these things will explain to you. Similarly about the RCMC, and also for other aspects of the starting of the business, some important details and information where from you will get those things. Practically I will open the sites and tell you how to get it. Okay. So that is how today we are starting with the exam practicals. Last time I explained to you also about in the first day itself, in the export means export and import business, we have to first look into the DGFT related aspect. DGFT publishes the foreign trade policy, and present foreign trade policy is the 2015-20. This is the present year. 15-20 means 2020 already expired. Then what we are talking about, but it is extended many times. Of course, it is the 5th time they are extended, and now it is valid up to 30th September 2022. The same policy which is 2015 to 2020, but the same policy extended now more than 2 years. Okay, so it is now valid up to 2022 September 30th. Okay, so in the foreign trade policy there are 9 chapters are there. First chapter is about the legal framework and trade facilitation. What are those? I will explain to you. Some of them I will show you also practically. Then chapter 2 will discuss about the related import and export related some formality, including the IEC, RCMC, EBRC, and all these things are provisions are there. These are generic provisions in chapter 2. Then chapter 3 specifically talks about the some incentives. What are those incentives are there? Earlier there is incentive like a MEIS and a SCIS schemes. Those are now no more. Now RODUP scheme has come. What is that? Also I'll show you. I'll tell you. Right. Then 4th chapter again. This is for the inputs, whichever you want to make the production of the export products. For that, what are the raw materials, packing materials, consumables, and others what are required? those things you can import duty free under this chapter 4. So this is also we'll discuss briefly. Then chapter 5 describes about the export promotion capital goods scheme. Means suppose you want to produce something and for the export production, for that you require certain production facilities, for example machines, equipments. So those also you can import duty free, means zero rate customs duty you can import, that is under the EPCG scheme. Okay. Then there is a EOU schemes is there. What is that also I'll tell, means export oriented units. Then about the deemed exports. Then this is the another scheme they introduced mostly for the agriculture products, for encourage the agriculture products, because of the we are in India suffering lot of logistics related issues and problems, and cost is very high. Our logistic costs compared to others are very high. For example, our logistic cost for exports is more than 14% of FOB value, whereas in many of the other countries it is around say 5%. So that is why very high export means, so there's a logistic costs are there, so that we want to compensate to some extent, so therefore this scheme was introduced. Then quality complaints and trade disputes also, many times whenever you are exporting any of the items or goods, there may be certain disputes may arise between the supplier and means supplier from India and the buyer from the outside the country. Maybe certain times disputes can happen. So how to resolve those disputes? The DGFT also separate cell for this quality dispute and complaints. There is a cell, they want to resolve it, taking this to higher authorities at the embassies levels and I think country to country levels. Then they want to resolve this. Okay. Then about the definitions, about various terms we are using in this foreign trade policy, those definitions are there in the chapter 9. So these are the total 9 chapters are available in the foreign trade policy. Now let us see to the foreign trade policy, where it will be we are getting. As I told you, foreign trade policy is published by the Director General of Foreign Trade. Where you will get foreign trade that site, let us move. That is what I told you. Today we are talking about the practicals. So suppose you are searching the Google search, DGFT means Director General of Foreign Trade. Just click here. Then it is coming the Director General of Foreign Trade. Click here. This is the website is coming. This is the website you are coming knowing in this one. So in this website, this is the foreign trade means Director General of Foreign Trade. They are the publishing authority for the foreign trade policy and related all import and export related regulations and everything also they used to publish. So here if you see the regulatory updates, in the regulatory updates, if you click here, there is comes a foreign trade policy procedure documents, right? Here you can again scroll down. Then first comes up the foreign trade statement, because if foreign trade when is introduced, then there is a statement, foreign trade statement about the background, what is the present situation. This is like a business case, what is the present environment and what our vision about how we are going for the next 5 years, what is our vision for the export, and of course import policy also related to then export. Then that means vision and mission, and what is the outlook for the long term, that is what the means stated in the foreign trade statement. Then of course foreign trade policy is there. This is the policy you say, as I told you there are 9 chapters are there. These are clicking here, so you can get the 9 chapters. You see each of these are the chapters, like first is legal framework and trade facilitation. Like each of the chapter wise there are there. For example, this I will open and show you. This is fundamental means legal framework about the formation of this foreign trade policy. This foreign trade policy present one, as I told you, it is been 1520. This been introduced through the section 5 of the Foreign Trade Development and Regulation Act. Under this act the policy was published. So other durations and all the framework, legal framework is mentioned here in this document. Okay, this is the clear. The trade objective facilitation, all these things are being given, and citizen charter like that. all the basic informations and details are provided, like issue of IEC means electronically giving the import and export code. IEC means import and export code. That is a very fundamental document, and through which you, of course, without which you can't do any import and exports. So this is a very fundamental document. How to now apply online, because everything is now become online. Electronically, how you can apply also you can understand. For example, if you're going to the foreign trade policy itself, the home page itself, there is a given the just an opening. So here itself they started with the IEC, because IEC is a very fundamental first step for any import and export business. So here apply IEC. IEC related helpline also means FAQ is also available, and also links for the IEC also available. So you can apply from this. If you want to start a business in import and export, you can start the IEC code starting with. Okay, so those provisions are there in the first chapter, and also in the first chapter there is other provisions like EBRC. EBRC means, again, that is also I'll show you. EBRC means electronic bank realization certificate. Bank realization means, suppose you are exporting, you have to get certain considerations through banking channels. So that banking channel is very essential, so that it has to be matched with whatever you are exported through customs, and equivalent amount what you have declared in the customs documents like shipping bill, similar amount you have to get through banking channel. So that matching exercise also been monitored. That is called export data processing and monitoring system, EDPMS, means electronic data processing and monitoring system for exports related this one. Similarly, import also there. So both are has to be monitored. Okay. So this is about the EBRC, means it is a realization certificate from the banks you are getting. Now everything is online. So this EBRC also you can get online. Then importer and exporter profiles means your every importer and exporter, when you are applying for IEC code, you have to provide certain basic information and data, and that profile you can anytime can see. If anything is required to modify, also you can do the modifications or amendments. Suppose your constitution you have added another branch, you can add the branch number, or address changes are required, you can add the address changes and everything also. So modifications and all things you can do. So there is a profile is developed in the system itself, the importer and exporter profile. So all these details are, these fundamental details are available in the chapter 1. Okay, these are the fundamental about the customs related, and how these interactions between the DGFT portal and other portals, also about the customs portal, then RBI and other relevant agencies, how it is been integrated, that is also given in this chapter 1. Okay, now let us move to the chapter 2. I'll show you. Again, I'm going to this regulatory updates, their foreign trade policy. I'm moving. In the foreign trade policy, we are now going to second chapter. This first chapter I'm closing. Second chapter, the general provisions regarding import and exports. Okay. So this is what the second chapter. Here it talks about what are the goods we can import or export. Free means without any restrictions. Free means without any restrictions, or what are the regulations are available, what are the some of the items are restricted, and some of the items are there are free to export without any regulations, without any licensing requirement, and there are certain prohibited items, and there are other items you have to export only through some this state trading enterprises. Only through them we are, like MMTC for example, only through them we have to export. So those provisions are given in this, and here broadly I will tell you what are the export related these aspects. Just a minute. You see, for the ITC classification when now coming, there is a two schedules are there. Two schedules means ITC means Indian Trade Classification, harmonized with HSN code means harmonized system code, that is international classification of the commodities. With that, our system also integrated. So we are operating at 8-digit ITC codes, 8-digit ITC code for the any of the import or export code. Okay, 8-digit level we are operating. There are two schedules are there. First schedule about the import and second schedule about the export. These schedules also I will show you in the system itself so that we can understand. Here, for example, I am going to this. Again, I am going to this here. Sorry. Yeah. Here I am going to this. Just it is opening. So here we are talking ITC HS based import and export policy. There are two schedules as I told you. Schedule 1, this is for import policy, and schedule 2. That means in these two policies, so in the schedules, what they're giving is what are the items are restricted, like you see these are the restricted items, what are the items prohibited, what are the items channelized through state trading enterprises. STE means state trading enterprises. Okay, and what are the items freely you can import or export, like that. This is about the import policy. So import we are talking about. So basically, as I told you, this covers about, just a minute. Yeah, you see, one is freely allowed items, means no permission required, no license required. The second one is restricted, where you have to get the specific license for either import and export. That import related details are given in schedule 1 and export related details are given in schedule 2. Okay, so this is the restricted items, means for these items the list is given in the schedule 2 and schedule 1 for the import, schedule 2 for the export. These items require the permission or the license from the DGFT and corresponding other agencies. And the other items are prohibited items. These prohibited items means you can't export or import these items because these are prohibited. You can't do anything about this. And there are channelized items, as I told you, state trading enterprises, STEs, only through them only you can import. For example, some urea products, that fertilizer, that you can import only through this STC or MMTC only. Okay, so these are how these are details are given for both import separately and export separately. Import in the schedule 1, and coming down, if you see, there is a schedule 2 is there. This is the schedule 2 about the export policy. Okay, here also similar like provisions are there, restrictions and other thing. You see, these are restricted items, these are prohibited items, these are STC STE items. Okay, then other category also there, SCOMAT items, means some electronic, like for example some certain items which are that special chemicals, organisms, metals, equipments and technology related items, those are called SCOMAT items. Means these SCOMAT items, there are certain items we can use for public general use, or also there are certain items, the same items may be used for the weapons and other destructive purposes also. So therefore these also restricted. These SCOMAT items also restricted, and for this special license is required. For this also special licenses are required. SCOMAT means special chemicals, organism, metals, equipment and technology. So these are the items. These also you require the license, special license you require. Okay, so that is how these details are available here in this format. You see these items, schedule 1, schedule 2 and schedule 3. Whenever you are starting any of the business, your product, when you are identified, you have to first see whether that export item, for example, you want to export, whether that export item you can export to these particular countries or not, that you have to first identify. So from India we can export or not, that is available in this schedule 2 for the exports. Okay, in the schedule 2 we have to verify whether it is freely allowed or any restrictions are there or any provision is there, or it has to be channelized only through certain agencies, state trading enterprises. So that has to be verified first. So that is the first step we are doing here to verifying whether that item we can export freely or restrictions are there, prohibition or channelized. This has to be identified first for any of the products. Okay. Like exports, I told you these are the categories like free,
Hello,
restrict.
sir.
Yes, sir. Yes, sir.
Can you brief about comments, sir? SCOMET scheme that
No,
special
it is not a
chemical organism.
it is
It
not
is
a
not the
scheme.
scheme. Can you
Yeah,
brief about?
yeah.
Can
Again
you
I will go
elaborate?
there. Yeah. I will again going there. This you see this comet, as I
Yeah.
told you. This is about the chemicals, not special chemicals, organism, metals, equipment, and technologies. What are these? I told you. These are used for the general purposes. For example, some of the chemicals are there like ammonium nitrate. Ammonium nitrate you can use in fertilizers and many other industries where the chemical that can be used for the manufacturing and production. Also, this ammonium nitrate also can be used for the destructive purposes because this is a highly explosive item. Many of the terrorists and other thing also use the ammonium nitrate based bombs and other thing. So therefore these are restricted. Okay. Similarly, nuclear aspects, for example, like equipment, some equipments we use the x-rays or gamma rays or other nuclear related means equipments. Those are used, for example, in hospitals, like x-ray or gamma rays for the various industries also they use it. So these are general user also there, and these again their uses is there in some destructive purposes. For example, nuclear bombs, they're also the same like equipments or technology can use it. So therefore these items are both combinations are there which are general use for the public. The other one is for the destructive or other equipments, like also terrorists also can use this one. So therefore these are also restricted. And what are those items are given here in this list. As I told you, this is the list. If you click this list and a very big list is coming, you see here these are the some of the chemicals effective from the 2021, and this list you can open like this. Yes, this in appendix 3. In the appendix 3, especially for this comet items. Yeah, these are the items you see. Just a minute, I will show you. You see, these are the some of the items you see. Precision tracking system using a code translator, means this is technology related. Similarly, some chemicals also there. Like this, these are various applications are there like this, like a software specially designed or modified for use in the system specific in the 5C. 5C at the top it is there 5C. This is the whether or not splitting the integrated non-contact devices. These are the items. And there are certain technical items are there, some equipments are there, some chemicals are there, some nuclear items are there. Those can be used for both the purposes, destructive as well as constructive purposes in industries and other applications like hospitals and etc. Therefore there's a restrictions are there. You have to make the application specially for this. Yeah, these are all different lists are there. These are different lists are there. You see, these are the different items. You see, everything is, these are different items are there. Okay, so these are the restricted items again, and for this you need a special license from the DGFT. Okay, clear, sir?
Thank you, sir.
Okay. So now we understood that about this comet items, and also for import and export, what are the restrictions and all things are there, that is also we have seen. Now going further, as I told you, third chapter we are now going. Second chapter basics are there about the import and export code and other formalities and all thing what you need to be required, basics in general provisions. That is what the second chapter. And third chapter onwards, there is incentive chapter is there. Third chapter is purely incentive. At present, the rod up scheme is there. What is that scheme? I will explain to you. Yeah. Earlier in the chapter 3, there are other schemes are like MEIS scheme, then SEIS scheme. Means MEIS means merchandise export from India scheme. Merchandise export from India scheme. That is MEIS. MEIS, merchandise export from India scheme. MEIS. Similarly, service exports from India scheme, SEIS. These two schemes are there. Those are being stopped from the 1st January 2021. 1st January 2021, these are not applicable. Means these are applicable only up to 31st December 2020. After that, these are being not applicable. New scheme is introduced, that is called ROTUP scheme. Means remission of duties and taxes on export products scheme. Remission of duties and taxes on export products scheme. Means whenever you are making any of the export item at various stages of the input stages, raw materials or packing materials, consumables, at various stages, again not only one first tier but second tier, third tier, like many back end also we are incurring many types of taxes which are not been allowed for taking the refunds, or remissions are not available through any other scheme. So therefore the ROTUP scheme is introduced to compensate the tax related what are the incidences that happened, but we have taken that taxes as our cost, because there is no provision was there for taking any of the refunds or remissions. So therefore this scheme is introduced to give some compensation towards the cost which we are incurred towards that taxes. Okay, so this is the scheme that is available in the chapter 3. Okay, these details of the item wise rates are given. Item wise means HSN code wise at 4-digit they are made the decisions at the 6 digits of 6-digit decision they are taken. At 6-digit level they are provided the rates. Let us go to the dot of the appendix 4R also, and let us see there in the system itself, right, where you will get, again you go, then the appendices you see, this is in appendices. In the appendices if you go there, in the appendices it is the fourth one. Just I will go, you see, as I told, this is the 4R appendix 4R. The 4R we have to go. Just a minute. Just I will show you. I wrote up separately given. Oh, sorry, this is separately given. Okay, okay. Yeah, this is the 4R appendix 4R. So you see like this, for each of the export items they are given certain rate as a percentage of FOB value. Suppose you are making a live fish export of the fish water, for example, this 0.5% is available as an incentive. Okay, this is purely like whatever you have suffered the taxes that is been reimbursed you through this scheme. So there are certain items you are getting 2.5%. There are certain items you may get even more also, and 0.5% to maybe certain times it is going to 4%, like that, 6% also there. So this is how we are getting. You see some of the items like turbots, for example, you are getting 2.5%. This is fish again, tunas, for example, here are there 2.5% you are getting. Like some other items I'll show you. This, for example, here's the snack, this tunas here again 2.6%. These are again seafood items. Some other items I'll show you just here. For example, green pepper, it is 2% is available. Okay, again subject to cap. Cap means per kg maximum they'll give you 1.3 rupees. This is what they mentioned. The cap means maximum amount they can provide. This is the percentage of FOB value. Suppose you are exported FOB value in Indian currency, for example 10,000 rupees, and you are getting a 2%, means you are getting say 10,000 on the 2% you are getting, means 20 rupees you are getting. Okay, 10,000 2% now. Okay, so here the maximum limit also they mentioned per kg wise, means per unit wise, that per kg it is given 1.3 rupees only, they will give you maximum. Okay, so like that they fixed it, the rates and also maximum cap for all the items they mentioned like this. So this is under the chapter 3 you are getting this benefit. Okay, this is what the under the chapter 3 you are getting. Now we are coming to the chapter 3, chapter 4. In the chapter 4 we are discussing about advance authorization scheme. Means suppose for export you require the import items for the raw materials, for example packing materials, consumables and other things you can import, which are inputs to your production. You can import duty free under the advance authorization scheme. Okay, and also duty free import authorization scheme also there, that scheme also comes under this. But here in this scheme you have to remember that these import items are been already the what are the items you can import and what are the quantity you can import, those are fixed through standard input output norms. This SION, this is called SION, standard input output norms. Based on these norms only you can import. Let us go to the system again. That is what practical I am showing to you. Again we are going to the that DGFT site only. In the DGFT site, if you go to these regulatory and provisions, there it is showing the policy. We are going to the foreign trade policy, and in the foreign trade policy we are going to the chapter 4 now. This is the chapter 4. Chapter 4, you see, this is chapter 4, and that is why I'm practically showing. Says tomorrow you can go yourself and you can search also yourself, so that you can understand it is better, right? This is duty exemption schemes. Here the what is that scheme talks about. Under this advance authorization scheme is there, and the duty free import authorization DFIA scheme, and duty drawback as per the customs provisions, it is also there. So these are the broad provisions are applicable under this chapter. Okay, this chapter, as I told you, you are entitled to get the inputs duty free. If you are paid, for example, in such case you can get the reimbursement, that is through remissions. That is a duty drawback scheme. The duty remission is duty drawback, means first you have to pay and then get back that cost whatever you are incurred as per the fixed rates. Okay, so these are the schemes are available in this year. And for that again let me go. What is the SION norms? I told you SION norms. SION means standard input output norms. Based on the standard input output norms only, you will be entitled for importing those items for the export item. For means every export item, there's a list of what are the imports allowed with quantity. I will show you example. Some of these items, so for example, food items, I'll download. Here you see very big list are there, of course. So that is what we have to little bit a. So this is the very big list about the food items. I'm taking an example. Just it is opening. You see assorted confectionery, for example, you want to export. This is an export item. You see this is an export item. The assorted confectionery items if you want to export, say 100 kgs you are exporting, then each of the 100 kgs you will be getting, these are the input items you can import, like sugar, then starch, then inedible sweeteners, these are sweeteners, then sand is sodium, saccharin stadium sodium for example. Like this, these are the different items are there. These all you can import. These all items you can import this much of the quantity. This is the quantity also given. Each of the item, how much quantity you can import against export of this assorted confectionery item, for example. Similarly, other items also there. I will draw down. You see, there's various other items there. You see, these are the mixed packed and internal and external consumer packages, assorted instant foods items. These are the items you can import for 1 kg of this item export. You can import, these are the items, these are the quantities. Okay. For example, biscuits are there. These are the biscuits. Very easily to understand biscuits, for example. Suppose you are exporting biscuits with or without fruits. 1 kg biscuits if you export, then you will be entitled to import the maida or atta or flour, for example, this much of the quantity. Sugar, this much of the quantity. Then vegetable shortenings are a cream, this much quantity. Then skimmed milk powder, this much quantity. Like this, for each of the item of export, there are corresponding import items, and what are the quantities also mentioned in the standard input output norms. Clear, sir? So that is how this chapter 4 we are talking about. Then chapter 5 is about the machineries. Suppose you want to export the biscuits. For biscuit manufacturing, you want certain machineries or equipments. For that also you can import those items, means with 0 rate of the duty, customs duty. You can import under the EPCG scheme under the chapter 5. So chapter 5 talks about EPCG scheme. Again, we can go to this chapter 5. Yeah. Here again, foreign trade policy we are going. And here the chapter 5 is talks about export promotion capital goods EPCG scheme. You can download and you can understand the EPCG scheme. Under the scheme, whenever you are importing, you can import duty free, custom duty free, and what are the amount you have saved. Say you have saved, say 1 lakh Indian rupees, for example, 1 lakh duty you have saved, then 6 times the what of the duty you have saved, that you should take as a obligation. 6 times the obligation you have to take. Okay. And 6 years period you have to fulfill that obligation out of export. Means these machineries are allowed to you for import duty free, subject to certain condition that you have to export the items manufactured through these machines. The 6 times the duty saved, that value, worth of the value you have to export within a period of 6 years. Okay. So that is the scheme, EPCG scheme. Okay. Now coming to the this EPC scheme is over. Then comes the duty drawback. Of course, it is administered by the customs, not the DGFT, but this is administered by the customs. Whenever you are exporting, those items are being entitled for certain benefit. Certain duty drawback benefits are allowed as per the year. All industry rates are there. Year means AIR, All India all industry rates, all industry rates means that the standard rates are been given average rating, like for example from the all over the India, what are they take the statistics on the basis of the averages they work out, and every year they used to publish the AIR rates for the duty drawback. Based on that, for the items you can get the benefit of the duty drawback whenever you are exporting. Okay, there are other schemes are there under the advance authorization, in foreign trade policy. Again, chapter 6 talks about the FTP policy of this EOU related, means export promotion, export oriented unit scheme. And also here some other schemes also there, like STP, then EHTP means electronic hardware technology park, then biotechnology park, software technology park. These also comes under this chapter 6. Okay, then there is other acts are there, separate act, not on the DGFT. Earlier it was there in under DGFT, but now it is separated as a separate act for the SCZ. So SCZ Act 2005 is applicable for that. And then another SCZ Act, only another provision is there, free trade warehousing zone. This is free trade warehousing zone, FTWZ. These are both operating under the SCZ Act only. Okay, then another scheme is introduced in 2019, and of course it is now 2020 onwards it is applicable. This is called as a mover scheme, means manufacturing operations in customs bonded warehouses scheme. This one, right, means you can now in warehouse also you can manufacture and then you can export, or you can sell in the domestic market. This is very flexible scheme they have introduced. So this comes under the section 55A and section 65 of the Customs Act. Okay, so these are the briefly about the schemes I explained to you. Now to start with the IEC
Sir,
code, for
excuse
example,
me.
I told you.
Sir,
Yes sir.
sir, excuse
Yes
me.
sir. Yes sir. Yes sir.
Can you brief about FTW and move, FTWZ and
I will tell.
mover?
Yeah, I will tell you, sir. These separate classes are there. I will explain you. This is only introduction, again, like giving you brief about the what the export promotion schemes are available. I'm giving you brief, and I will come separately for the SCZ, how the SCZ operates and what are the how do you can export from the SCZ or import from to the SCZ, and how they can sell into the domestic market. All these things in the separate sessions I will cover. Okay.
One more thing, sir.
Similarly,
Out of,
yes, sir.
out of this all schemes, which is the best scheme for industry? Mover or SEZ or EOU or advanced
These
license, advanced authorization scheme? Which one is the best one?
So there is no generic answer for this. It depends upon what type of product you are exporting or what type of industry you are and what type of requirement you have. All these things depends. Suppose I'll say EOU scheme. EOU scheme is very good scheme, but it is lot of restrictions because it is a customs bonded warehouse. The EOU is a customs bonded. That operation under the customs. Every time lot of documentations are involved, but not much of the benefits. Okay, and earlier that benefits are there, like in income tax also that benefits are there under section 10A of the Income Tax Act. That income tax also been exempted for the 5 years tenure, but that is no more now available. So that is not good scheme now. EOU I don't recommend. Then SCZ, yes, SCZ is a good scheme. Again, that sunset is already come over, means already that sunset of provision is there. Income tax benefits are no more available, but SCZ, all type of inputs, whatever you require, you can import duty free. And of course, you have to export. This is like a foreign zone, foreign trade zone. It is not like it is in India only, but it's treated as a foreign land. So all import and export purposes, it is the duty free. You can import and you can export also. Whenever you are selling in the domestic market, then it is treated as an import for the domestic means buyer. So this is like schemes. and mover and all these things, different schemes are there, but it depends upon, suppose you don't have the much of the input requirements. For the example, most of the inputs are available in domestic market, then advance authorization is no more useful. Advance authorization is useful when you are operating under imports, you want to take that advantage, then it is a good scheme. But otherwise, if suppose you want to make the textile item, for example, the yarn you want to export, for yarn, for example, cotton yarn, that cotton is available within India, you want to source within India, then this import is no use for you. So you need not go for that scheme. Like that, various schemes are there. So depends upon the particular industry, depends upon the particular requirements of that your company. You can select various options and schemes.
One more
Generalization, of
thing.
course, is not possible. Yes,
Okay,
sir.
one more thing, sir. In terms of
Yes.
compliance part, which one is the best? Irrespective of industry, in
Yeah.
terms of compliance part.
Compliance part, if you see, then I recommend for the mover. This is the very latest scheme, very less of complications, less of documentation, less of obligations and other things. But all other schemes, there are certain obligations are there, certain constraints are there, certain documentations also there, every scheme. But this mover scheme is not much of the documents, only one time you have to execute the bond with the customs at the time of import, that's all. No much of the documentation.
Thank you.
But
Thank you very much.
all other schemes are certain documents. And EOU, for example, this is especially one particular area you have to take, that has to be bonded. SCZ, again, a large area you have to take. SCZ, generally there is SCZ developers are there, SCZ units are there. SCZ developers are mean they takes 1,000 acres of land. In 1,000 acres of land, they develop the plots and facilities where the other units will come for manufacturing. So that is what the SCZ scheme. SCZ of late, it become very costly affair, because that particular areas where they are putting that units, that cost of rental or other aspects are very high. So therefore, it's not working well in at present. Okay.
Okay,
So
sir.
the mover
Thank you very
scheme,
much.
from my point of view, this mover scheme is very advantage. We can go ahead with this mover scheme. It is actually combination of like these two schemes, like which is there, for example, this advance authorization and this EPCG scheme. These both schemes like put together, it can operate like here in this mover scheme. Okay.
Thank you, sir.
Now, okay, thanks. Now coming to the digital signature. Nowadays, everything is electronic. Electronic applications you have to make. Electronic filing of the IEC, starting with IEC code, and all other applications you have to make through electronically only. Sorry, some noise is coming, sir. Oh, some muted, sir. Okay, whenever you want, again you can discuss with me, unmuting, and you can discuss. So the digital signature is very essential now. Sir, muted, sir. Yeah. So because all the applications, as I told you, through digital signatures only, means electronically only. So digital signature mandated. So you have to take the class 2 digital signature of the DGFT recommended. These are the companies are there. From there you have to take the digital signature for operating any of the applications or anything you want to file. You require the digital signature. Even GST also, if you want to file, you require the digital signature. Any of the application, like I told, advance authorization, EPCG scheme, or EOU scheme, all these things, you require the digital signature. Okay. So digital signature is fundamental requirement. Now coming to the IEC code. IEC code, as I told you, in the DGFT site, at the home site itself, they provided this DGFT home site. If you go there itself, they mentioned about the first is apply the IEC. I mean, this is the fundamental step. You have to apply IEC online application. Online you have to apply with DSC, means digital signature compulsory. DSC you have to take, that mandatory requirement. Okay. Now some questions we can answer for the IEC. IEC is nothing but PAN number and IEC one and the same, effective from the July 2017 when the GST has been introduced. Then the PAN is made as an IEC, right? So but PAN you must have got, but you have to register the PAN number with the DGFT, then only they give the IEC code. IEC code is same as PAN number only, but separately you have to register with the DGFT. That is a mandatory requirement. Then for that, the company's proprietors or directors or any other concerned person important, his Aadhaar card or voter ID is mandatory requirement, or passport is required. Then individuals or companies forms cancellation check also required. They have to give the bank means bank, or whether they are operating through any banks or not. That is an essential requirement. Then rent agreement or electricity bill, that they are operating at certain premises, that is the understanding. So therefore they has to give the rental agreement or the electricity bill, etc. And self-addressed envelope for the delivery of the IEC certification. Nowadays is online is available. You need not get this all these things online. You can download also IEC code. Okay. Then the questions, whether we can get the IEC code without PAN? No, because PAN, once you get only the same PAN number is treated as an IEC, but you have to separately apply. So first you have to get the PAN, then only you have to get the IEC. Then whether an entity has to get the IEC for each branch wise. Suppose you have a one company is there in Delhi, your parent company, and there is many branches are there in Hyderabad, in Bangalore, in Mumbai and Kolkata, like many places. For each branch wise you has to get the IEC code? No, always it is one entity, one IEC. Like PAN card also, one entity, one PAN card, despite of many branches. Here also one entity, one IEC. Okay. Then whether IEC is mandatory for service exports also? Yes, this is the biggest question again. Okay, import and export, it is a mandatory, as I told you, mandatory requirement as per the DGFT foreign trade policy. Okay, but services, they are given certain exception. Services, it is your choice. If you want, you can take the IEC, other without IEC also you can export, but subject to condition. You are exporting the service export, but any of the incentives if you want, then IEC is mandatory. Suppose small service exports you are doing where you don't want any of the incentives or any of the export benefits, then there is no need for IEC. But if you want any of the export benefits, then IEC is a mandatory requirement. Then again, IEC need to be updated. IEC is one time issue of the, like PAN number also one time for the entire life of the entity. Similarly, IEC also one time. But recently what they made is mandatory now to apply for this notification is given on the 12th February 2021, this notification, through which every year, financial year, starting from the April to June period, you have to update this on system, on online only you have to update this IEC. Otherwise IEC will be deactivated. IEC will be deactivated because there are a lot of people applied for the IEC, but they're not operating, or they're making some wrong use of this IEC. So therefore government has made certain restrictions that IEC every year during April to June you have to so again you have to activate, means again you have to update. But otherwise it's not a new application, just updation is very simple. You are operating like that. Okay, that online only you have to apply, otherwise it will be deactivated. For this year there is no cost is involved, no charges are there, simply you can apply for IEC, right? So this is how this foreign trade policy, these details are given for the IEC code in para 2.05 of the foreign trade policy. Okay, this is the exactly what I am told. As I told you, this in updation is electronically every year is required. That's a mandatory requirement. Okay. Then export promotion councils. For each of the item whichever you are identified, for different items there are different export promotion councils are there. Okay, as per the again foreign trade policy appendix 2T of the handbook of procedure, because in the foreign trade policy when you are talking about DGFT site I am talking about, they mentioned about two. One is the foreign trade policy and another is for procedure. The procedure means handbook of procedures. You see, this is the foreign trade policy and this is the foreign trade procedures. So procedures we are talking about, there the appendixes are there. Here you see appendix 2T we are talking about, where it is given the list of all the export promotion councils. The 2T we are talking about. Just let us go to the 2T. Yeah, this is the, you see, list of the export promotion council and commodity boards. So this is what we are talking about, export promotion councils and commodity boards. These are the specific commodity boards are there. These are the total 28 plus 1 is there, and 7 the commodity boards also there. So these are how this all the board. These are specific item wise. Suppose apparels are there, mean garments for example. This is the export promotion council. Chemicals for example, basic chemicals and pharmaceutical. This is the export promotion council. And for example, there is a this is also chemical. For example, there is a engineering items. This is an engineering export promotion council. Leather, there is a leather export promotion council. Handloom export promotion council. Either different export promotions councils are there, depends upon the products. Okay, which of the products falls under that, you have to select according to that export promotion council. Okay, clear sir? So these are the list are given in the here. You can download in the appendix 2T. Okay. Now suppose you identify certain item, how to find that HSN code? That is a very important aspect. How to find the HSN code? For example, you want to export mango. How to find this mangoes, this HSN code? HSN code, as I told you, this in India we are operating at 8-digit level. Otherwise, HSN is international codification, that is by WCO, means World Customs Organization. They have developed this one, WCO. They have developed the coding. That coding is uniformly applied at 8-digit level, up to 8-digit level. It is uniform across all over the world. All the signatory countries, around say 200 plus signatory countries have been signed, and all these countries it is uniformly applicable, same meaning, same code, and same meaning, same product, up to 6-digit level. Additionally, countries can adopt another 4 up to 4 digits. Additionally also you can adopt and they adopt. India is adopted additional 2 more digits, means 6 plus 2 means India is operating at 8-digit level. And the US, for example, they are operating at 10-digit level. China, for certain items, they are operating at 11-digit level. Like that, each of the countries, they have the liberty to get additional digits, additional numbers also they can use for more detailed classification. Okay, this is about the classification of the goods. So about the mango you want here to export, first you have to understand what is an HSN code. In that HSN code, whether it is allowed free, or any restrictions are there, or any provisions are there, or any channelization is there, that you have to understand. For that, there is a one beautiful site is there. I will show you. This is the site. This is a Federation of Indian Federation of Export Indian Export Organization, FIO, FIEO. Federation of Indian Export Organization. They have developed this portal, indiantradeportal.in. Okay, in this portal, how to operate, I will tell you. How to get the HSN code and nothing, very easy. And I tell you, write down this code, this website you can write down. And otherwise also, if you can go to the Google search, there also you can find this one. I will close these things. Suppose India trade portal, India trade portal. If you go in Google search, this is the India trade portal. There you can click. This is, see, this is, as I told you, FIVO, Federation of Indian Export Organization. They have developed this one. Okay. And their HSN code only first they mentioned. HSN code wise, you can go and search and you can understand various benefits and all thing also from one site here itself. So this is very beautiful site. You can go through code. Either if you know the code, you can put the code number. If you don't know, you can write the simply the description. For example, I'm making the mango because mango is you know, it is very means the fruit of king of fruits. So the season also come now, the summer season, generally the mangoes comes. Let us see the mango. You can type, then you can click here. Now it is mango related, all these details comes. Mango with search word, all the details come. For example, Alfonso mango you want to export, mango pulp and mango, many things are there. Fresh fruit manganese. Just a minute. Yeah, this is a Totapuri mango, different mango varieties and all thing they're talking about. Sweet mango chutneys and all thing also. Mango items also can export. Fresh mango also can do it. You see this fresh mango, the guavas, mangoes, all this thing in the same category. Then you can select this one. Either you want to import or export. For example, we are talking about export. You can click export. Okay. Once you click the export, again they will ask for the detail. You have to select at least 6 level digit or 8 digit level. You have to select it. Suppose this we are selecting dates, figs, pineapples, and guavas, mangoes. These mangoes mean fresh mangoes. Then I'm clicking this one, selecting this one, then going to next. Which country it is asking. Suppose I want to export this to Germany, for example. I click the Germany. Then again I click next. I'm going. Sorry, sir, I selected all again. Sorry. I selected this one. Next, I'm coming. Then I'm going to the Germany. Then I'm going to the next. Then again it reconfirms whether the same code we are talking about. This is an HSN code, as I told you. This is an HSN code. The HSN code, yes. Then click next. Then it comes like this. Here lot of things are hidden in this A. You can understand first about the export policy. Export policy means, as I told you, whether the this mango is freely, means without any restriction you can export, or any restrictions are there where you require the licenses, or any prohibition is there or channelized, that you can understand from here. Export policy, you can click here, then it will show you this mango is, for example, this we are talking of mango. If mango can be, policy is free, means without any restriction you can do. Export permitted freely, this is what the meaning of it. Export permitted freely without any restrictions. Okay, so that is what once we have found. This is very important first step. So therefore in this also they made stepwise. This first you have to verify. Then any benefits are there, export you are doing, any duty drawback is there, like recently we have discussed what is the duty drawback, that you can understand here. Duty drawback, for example, this item there is a 1.5% per means this is of the your FOB value. 1.5% of the FOB value you can get the duty drawback. So this is the meaning of that. Okay, so this is like one benefit, export benefit. Okay, then what are the ROTUP? I told you just now, I discussed on the chapter 3. This is the ROTUP scheme. In the ROTUP, you see for these items This is mangoes and other thing. What is the benefit you are getting? You are getting 3% of the FOB value. 3% of the FOB value you can get, subject to, this is the restriction, means per kg 2.2 rupees per kg. Okay, so like that you can get the benefit of the ROTAP. Then what are the other benefits?
Select it two scheme benefits, sir. Under
Yes, sir.
two scheme,
No,
duty drawback and ROTAP, both can I can shall I claim?
yes, sir. Both you can claim, sir, because these are the two different chapters, sir. This ROTAP is under the chapter 3, and the duty drawback, in fact, under chapter 4 they mentioned, but it is a customs administered provision. Customs are providing. The purposes of these two are entirely different. The ROTAP, as I told you, the duties are taxes which you are suffered, which you are taking as a cost because you are not getting any relief through any other existing schemes. The existing scheme like duty drawback you are not getting for these certain items. Similarly, you are not getting any of the other schemes also, like advance authorization or other schemes also. If you use it, even EOU also, you are not getting that benefit. So therefore they introduced the ROTAP scheme. So ROTAP scheme is entirely different. Independently it can operate parallelly with duty drawback. Means you can get both the duty drawback as well as ROTAP scheme, both you can get it. Okay, clear, sir?
Thank you, sir.
So now, due to interest subvention, suppose you are operating a small scale industry, that is a MSME, registered MSME only, means Udyan registration you have to take. Udyan registration is a mandatory to get this benefit. This benefit is, this is the interest subvention, means suppose you are taking any of the export related the loan from the banks, for example, for export financing. Of course, I will come in the one of the chapters, I will come with the export finances, then I will explain to you more details. But here what is that, suppose you are getting in the market rates, for example the interest is say 12%, and 3% less interest you can get now, means 12% means you now get 9% that interest you can get. Suppose in market banks are giving 10% interest charging for the loans, then MSME if you are there and you are exporting, for example, then you will get the 3% subvention, means less, 3% less you can get. 10% means you can get at 7% of the interest. Okay, so this is also a benefit for the exporters. Clear, sir? So these benefits like that you can get it. So you remember this portal, very useful portal, Indian Trade Portal, where you can get about the HSN codes also you are getting, because you simply type the only mango. There you can understand these are the this HSN code for the description as I told you. Okay, and what are the benefits you are getting also, you can getting from one site, all the related benefits and other thing also you are getting. Also, suppose you want to export on payment of GST, then also you can understand how much the GST on this. On this GST is, this is the 5%, and the nil actually. Fresh mango, this is fresh. Fresh mango means nil. If you are making any processing, then it is a 5%. Okay, otherwise fresh is 0%. So like that you can understand about the one place all the related details you can get for the export. Clear, sir?
Yeah.
Interesting this
Is it
side.
possibility is there to get the all HSN and product description anywhere in the portal, any supported things?
This only, sir. This only, this you can get
But
it.
it is, I need to one by one, I need to enter. Without entering one download, I can able to download. What are the available in the
okay.
existing list?
Okay. That again, here also, of course, you have to get it. I'll show you ITC HSN. Just a minute, I'll show you.
Can you explain, sir, what is the services? All these are services. Are you going to explain these are services header? What are the header is there in this dashboard,
This,
regulatory update services?
These are, for example, EPC scheme you want to apply, you can apply here. Advance authorization you can apply. MEIS I told you, this is no more now available, but this is earlier exports. Suppose you have made an export before 1st January 2021, for that you can apply here. Okay, similarly the transport and marketing assistance also I told you, 7th chapter, 7A chapter, this application you can make here. The deemed export benefit applications you can make here. This is like services, means all the applications like that you can make here, right? Advance authorization, you see, advance authorization, EPC scheme, all these things you can do it, including IEC also. IEC anyhow in the front itself is given, and these about the policies, procedures, and all this related. Okay, here for example this ITC you wanted, just I'll show you where it is available. This you see, ITC HS based import policy. So enter all the list you can get here. I click, this is for import I made here. This for the import, again chapter wise you have to download chapter wise. This is chapter 1, chapter 2, chapter 3, like that you see. These are different chapters are there. All the chapter wise you can, whatever the chapter you want, you can accordingly you can do it. We are taken for example this mango, what it is a code you have taken. This is like 8th chapter, this one, the first 2 digits indicate the chapter. This is the 8th chapter, like that you can go ahead, right? So all these things are available in one place, like chapter wise here in this place. Clear,
But
sir?
do you have any soft copy, sir? All these things in from tax guru side. Do you have any soft copy to provide the our
These everything soft
students?
copy na, sir. So these
This
are
is
all
soft
soft
copy in the
copy only, na.
website, and readily available in the Excel or somewhere else in from tax guru
No, no,
side.
Excel, no, no, Excel is not available. But is it from the DGFT site you can do this one, or item wise also how to calculate it's shown to you. This is chapter wise, each of the chapter wise. For example, this 7th chapter, edible vegetables, for example, you can download here. These are big, very big list will come. It's not like one Excel sheet. Each chapter you see, this itself is 12 pages.
Yeah.
One chapter 12 pages. There are many chapters are there, no? So all these things you can do now. 98 chapters are there. 98 chapters. And how many
98
pages
yes.
it take? So it is a very big volume, a book actually. So these are like each of the items you can see. You see whether you can freely do or any restrictions are there. All these things are mentioned. Somewhere places you see there are restrictions are there. Some notifications are given like these notifications.
Yeah, we observed some areas that in the system itself there is only 4 digits in there, not in a minimum. It should be 6, right? If 6 is not available, only 4 is there.
Where is 4, sir? You see the read it's now. How many digits are there? How many
Suppose
digits, sir?
0
No, no.
0 7.
Here, 07131010. How many digits? 8 digits.
Here it is there, sir. Top,
This one,
top.
this I'm showing now. I'm showing this one. You see, LOPS,
Yeah.
8 digits. Everything is there 8
Dried,
digits. Sir.
leguminous.
Sir,
Dried.
at the top also you see, sir, all are 8 digits.
Here,
These are
sir.
all 8
In
digits.
down, sir. Down.
Down.
Second line. Yeah.
This is first they'll give the overall description, then detailed descriptions are this. Under this
Okay.
these are the 4 digits, and further they're divided into, further they're given, you see. So like this you have to go to the 8 digit. Everywhere 8 digits. This is the broad description at 4 digit level description. Then detailed descriptions are there here in this 8 digit. Like this,
Okay.
you see this item is restricted. Some are the free, some are the restricted. Some may be prohibited. Like that you can see from this. You see, some of the items are restricted, some are free. Like that is everything is 8 digit level. India we are operating at 8 digit level. Okay, clear, sir?
Okay, sir. Thank you.
So
Thank you.
like this you can verify. from this side. Good. So you make your exercise. I'm giving to exercise to you based on this site, India Trade Portal. You go there and find, you make certain your interested item, any items you can select and try to find out whether it is restricted or not, what is the duty drawback, what is the ROTAP, what is the interest subvention, what is the GST, all these things like you can find out. And you make the exercise yourself, so that some practice you have to do, then only you can understand. Otherwise, simply by telling me, just I'm showing something, tomorrow you may forget unless you practice it. So I'm sharing these things, both these slides, this slide and this slide I'm sharing to you. This how to go about step by step I mentioned. So go through it and make a practice. Once you do the practice only you can understand. Otherwise, you can forget immediately. Okay.
A humble request,
So
sir, for you. This
yeah,
site is
yeah.
very visible, only gist of the total act. It is kindly share us. It is very useful for us. We do, for prima facie, by seeing this, we can understood the things. It is a very
Which
interesting, impressing the slide which you have made. Totally gist of the
so,
act you have made very clearly.
so I'm sharing now, sir. These are all available to you. Recorded, everything is
Recorded
available to you.
only not only slide is enough for us. It is I could not able to download. If you are sharing as students, these are
Okay,
very useful. Only slide PPT only,
okay,
not
okay,
all things. Only
okay,
PPTs.
okay,
It is a suffice
okay,
for our
okay,
requirement.
okay, okay. Relevant topics which are there, definitely I will share with you. Nothing to worry about. Okay. So now we are going to understand about the GST, because GST is a mandatory requirement. I told you some time back. This is a mandatory requirement, GST. Then what is the GST and other thing we'll discuss now. Okay. GST is introduced from the effective from the 1st July 2017. 1st July 2017, after merger of various other earlier central as well as state taxes, indirect taxes, they club together, and it is like an umbrella scheme. One means unified, single unified tax system they introduced. Okay, I'm not going about the GST, because GST also we are conducting another session through Tax Guru. If you want, you can join that session also. That is separate. But brief, I will tell you about the basics about the GST, very relevant, which is relevant to for the export and import topics I will cover. Right. Then GST is a the event for taxation in supply, and is a principle is always they follow is a destination based principle taxation. Destination based taxation means that where it is reaches, that state will get the revenue. That is what the destination based principle of the taxes. And is value added tax. Value added tax means only on the value addition only we are making the tax, not on the entire value, but only the value addition. How it works out, I will give some example, then it will clarify. And again, it is a multi-point taxation system. Every supply you have to make a tax payment at every stage of the supply. Every stage of the supply you have to make the tax. Again, it is seamless credit also available. ITC we call it input tax credit. So how this happens, with simple example I'll tell you, very simple, like broadly I'll tell you. Suppose you are a taxable person. Taxable person means, suppose you are registered with GST. Once the threshold limits and everything comes, then you have to register. And in certain cases, even though your threshold limit is less than say 40 lakhs or 20 lakhs in service cases and other products, in some states is 20 lakhs, in some states is up to 40 lakhs for the products only. So even though it is within the threshold limit of the 20 lakhs or 40 lakhs as the case may be, but import and export business, you have to take, it's a mandatory requirement for the GST. Suppose you are a taxable person, means you are registered with GST, then you become a taxable person. Suppose you purchase certain items from a supplier, like your inputs or input services like raw material, packing material, consumables, or any of the capital goods or other trading items also you purchased, then you have to pay the tax to the supplier. The supplier collects the tax from you and you are entitled for the ITC for whatever the tax you have paid here. You are entitled for taking the benefit of the ITC. Okay, and then you are selling, for example, to another customer. You are selling the product to the another customer. This is outward supply, we call it. There is input supply, where inputs, raw materials and all things you are taking, and output after the value addition. For example, you are supplying to somebody else, then you are collecting the tax from your customer, and the tax you have to pay to the government. While you are paying the government, you are taken ITC. That ITC portion you can adjust. Suppose you are getting, say, you are getting, for example, the tax of the input tax credit, say ITC, say 100, and on output suppose you have to pay the tax of, say, 150. But since you get input tax credit of 100, you can adjust about the 150 you have to pay, but 100 you can take the ITC, which you can adjust towards your tax payment. So net payment of 50 only you have to pay. So that is what on the value addition only you are going to pay the tax, only on the value addition. Okay, so net of this only ITC you have to pay the tax to the government. That is the basic concept of the GST. And GST has a 4 aspects. One is about the supply, means what is the taxable event is the supply in case of the GST. Okay, and when means that is the time of supply. Time of supply means generally it is when you are making the goods. For example, you are making the supply from your premises. When you are making the, you are supposed to make an invoice. The moment you are making the movement from your premises, you have to make the invoice. That is the point of time of the supply. Then where means that place where you are exporting, based on that whether it is a CGST is applicable, SCST is applicable, or it is ITGST is applicable, means interstate or means intrastate. That depends upon your place of supply. Okay, then value of value means that transaction value, whatever you are agreed upon between the buyer and seller, what is the price actually paid or payable. What is the price actually paid or payable is the value, transaction value. Generally transaction value is taken unless otherwise there is a relationship between the two parties, and price is the prime consideration, then only we are taking is a transaction value. So this is brief about A. Now coming under the import and export, how it has to be treated under the GST. Then what is the export definition we can understand. Then what is the import definition also, accordingly we can understand also separately. Then what is the nature of means export nature of supply, whether it is treated as an interstate or intrastate, and what is the there, then what is the zero rated, and what are the two options available for the export of the goods under the GST. That is also we can understand. Then about the export refunds and other thing also, how to make the refunds, ITC refund or IGST refund. These things we can understand under under this session, right? Then first is definition of export. What is an export? First, export is as per the goods. There are two aspects are there, goods and services. First we discuss about the export of goods, then we discuss about the export of services, but mostly these sessions we discuss about the export of goods. Okay, export of goods means as per the section, everything is I mentioned here, as per the section 2.5 of IGST Act. Export means taking the goods out of India to a place outside India. This is an export. Very simple definition they made. Taking the goods outside the, means from India to outside India. That is what the major, the simple definition. But export of services, of course, there is a very lengthy definition is there. There are 5 conditions has to be satisfied. All the 5 conditions has to satisfy, then only it's treated in export of services. What are the service provisions? These are the 5 provisions you see. The service provider and is situated in India, means who are the service provider, he must be in India. The service recipient must be outside India. Then the place of supply must be outside India. Place of supply must be outside India, and payment must be received in convertible foreign currency or in Indian currency in certain cases as permitted by the RBI. Okay, and fifth condition is this means the buyer and seller are the service provider and service recipient are not the mere establishment of the same company or same not a distinct person. Means it is not the same company's representative. For example, suppose you have a company in Delhi and your representative is there in Dubai. Both are operating under one company, one unit only, and in such case such transaction will not be treated as an export, though you are sending certain software to him. For example, software means the service, some services you are providing or he is providing services, but these are not treated as a services, export of services. There should be distinct units must be there. For example, your company in India is registered in India, and suppose you are established another company, suppose in Dubai, registered in Dubai, then these are not distinct persons, but these are different companies because you are registered in different countries differently. So these are treated as a independent units like. Okay, but suppose you are not doing so, but you are put simply your representative in some Dubai, for example, you are operating, then these are treated as a distinct persons, then it will not be treated as a service export. Okay, so this is brief about the export definition under the GST. Now I will tell you one transaction. I will explain to you. You have to tell me whether this is a export or not. Suppose you are an Indian business and there is a US customer. He has placed an order on you. US customer placed an order on you. You received an export order, and for that you have sourced the item from the China and asked the Chinese supplier directly ship the goods to the US, and the consignment is reached the US and he has made the release of the payment. You have received the payment. Now tell me, this transaction is an export or not? This transaction is an export or not?
Export only, sir.
Okay, because you have got the payments in foreign currency.
Foreign convertible currency.
Okay, so therefore you feel it is a export.
Situate the documents before reaching to the India, directly from China to US to China, supplier China and customer US. You are choosing a document and sending to the goods to the US. The person is
But
sitting
it's
in
not,
India.
but it is not so, sir.
Okay.
It's not so, because in the definition, again I will go to the definition. What the definition talks about? Taking the goods out of India to a place outside India. Whether these goods are going from India, the goods are not going from India, it is going from the China. The goods are going from China to US, but where the goods are going from India? Here the definition very clearly told, physically the goods should be taking goods out of India to a place outside India. Taking the goods out of India means from India it has to go. That is very clearly the definition is given. But in this case, it is not so going from India, it is going from China. Therefore, this transaction is not treated as an export. Clear, sir?
But under which type of transaction it will cover, sir? This transaction?
Okay, okay, good. You have a GST knowledge, sir?
Yeah, I am handling.
Okay, okay, okay. Suppose your GST knowledge is there. This you are making to the this, for example, you are making the invoice to the US and you are getting the payment in US dollars only, but the goods
Yes.
are not moved. Goods
Yes.
are not moved. So you can
Yes.
make this invoice to the outside India, means it is interstate. Outside India is interstate transaction. So you make the invoice like paying the IGST. Okay, of course there are two options are there. I will show you what are the two options, but here IGST, you have to liability is there that you have to pay, because it's not treated as a means export. Therefore the tax payment liability is there with you. The tax payment liability is there. how it is be treated, the place of supply is outside India, therefore is interstate transaction. So IGST liability is there, you have to discharge the IGST liability.
Why, sir? Why we
Yes, sir.
need to dispatch IGST liability since it is the export?
So it is not,
it not qualified? Huh?
sir, here I told na, sir, this is not like export. This is like a
Okay.
domestic transaction only, like other than
Okay.
export transaction. So tax liability is there. Only export you have a either getting the refund and other provision is there, but it's not treated in export. Therefore, export benefits you can't get it. So tax liability is there. You have to make the tax payment.
I will give one idea, sir. Here it is. I am placing. I
Yeah.
am instructed the supplier who is the China and the customer to supply the my customer where he has located US to supplier in located in supplier. My document I endorse my documents and send to the US. Earlier resume there is
Sir,
a
sir, sir, one thing I'll tell you. How will get the payment, sir, without raising the invoice? It is has to reach to the Indian banking system
I
only.
will raise the invoice. I will raise the invoice from India. That the document will received by my customer by endorsed.
Okay, sir, but liabilities are there, na, sir, because it's not taken as a export transaction. So tax liabilities are there that has to be discharged. Okay.
When I switch off
Okay,
switch the
that
document,
pardon, sir.
switch over the
Hello.
document is there, na option endorsing document.
No,
I
sir,
am endorsing.
that separately we'll discuss, sir. That is not applicable.
Okay.
I'll tell you
Okay.
separately. That's not
Okay.
applicable. Again, when the documentation part comes, then also I will discuss again this part. Then I'll explain
Okay.
to you what is the
Okay.
provisions are available and what is the tax liabilities there or not. That's first question you have to make is whether tax liability is there or not. But is not here in this case. We are discussing whether it is treated in export or not. That much we are discussing. So it is not treated in export is very clear.
Okay.
So other transaction, how it will happen, we'll discuss in separate other once I'll come to the documentation part, then I'll explain to you whether the taxable or not. Those things I will explain to you. But at this
Thank you.
stage, we can understand this is not an export. Okay,
Okay.
this is not an
Thank you.
export. And then export is treated as an interstate transaction under these sections. This comes under the IGST Act, and because we are exporting from India to outside India, so therefore these are called as in a interstate transaction as per this section, this one, right? So these are interstate transaction. When now the interstate transaction, the tax liability, if any is there, is IGST is applicable. IGST is applicable. Okay. Now comes to the how to make the treatment, right? Registration is required. Yes, registration is a mandatory requirement because it is interstate transaction we are treated. No, this is the interstate transaction under the sections as I told you. So this is the interstate transaction. Interstate transaction means under section 24 of the CGST Act. If you refer to section 24, is a mandatory registration is there. Means you have to mandatorily register with the customs. So all the importers and exporters need to be registered with GST mandatorily. So that is the provision, right? So 100% registration is required for the exporter. Treated as interstate transaction, therefore section 24 of CGST Act applicable. So therefore the exporter must be registered. That is very fundamental, right? Then what is the zero rated supply? Let us explain to you. The zero rated supply means as per the section 16.1, the definition is given of the IGST Act. IGST Act section 16.1, they mention zero rated means supplies directly exporting outside India, that is direct exports, that export of goods or services. Just now I have seen what is the definition of export of goods and services, we are already seen. Okay, if that is there, that is treated as a zero rated. And also supplies made to SEZ or SEZ developer for authorized operations, then also it is treated as a zero rated. Okay. then these are two transactions treated as a zero rated. Why we call it zero rated means there is, you see, the zero rated why means the exports generally these two are treated in exports, so exports should not be charged for any of the taxes. We can export, but as taxes should not be exported. So whenever we are making export, the taxes relief must be there. So therefore they introduce the zero rated supplies provisions. So the exports mean direct exports are supplied to SEZ units or SEZ developer are called as a zero rated supplies. And when zero rated supplies are made, then when zero rated supplies are made, then ITC also allowed, even though you are not discharging the export related taxes, but you can avail the ITC. That is the beauty of the zero rated. Otherwise, in GST, if you have some brief knowledge, I will tell you, whenever the these finished goods you are supplying, that exempted, for example, means tax you are not paying, then ITC also not allowed. If you're not paying on the item, for example, you are selling the milk, for example, milk you are export, means supplying in domestic market I'm talking about. Milk you are supplying, milk is exempted item. Exempted item means tax is not paid on the milk, so that all the related input tax credits also you are not allowed to take. But when it is zero rated, even though on the finished goods that supply, output supply, outward supply, you're not paying any tax, but input tax is allowed, that ITC credit is allowed, input tax credit is allowed. That is what the beauty of the zero rated. Okay, this is under the section 16.2. okay, whenever you are making the export, either means that is zero rated supplies. Zero rated supply means export or supplies to SEZs. So these two, when you are doing taking, that means zero rated supply, then ITC is allowed. Okay. Then ITC, when you are making export, of course taxes should not be applicable. That is what, but input tax credit is allowed. That is very fundamental. They're given the yeah. Then there are two options are there for making the export under GST. There are two options are there for making the export under GST. That is under section 16.3 of the IGST Act. First option, the first option under 16.3A, that is what the first option. Here, without payment of tax, means whenever you are exporting, you need not pay any tax and you can export. When you are not paying any of the tax, what happens? Whatever the input tax credit you are taken, because I told you, input tax credit is allowed, even though you're not paying the tax, but input tax credit is allowed under this section 16.2. So what will happen? This input tax credit, this excess is remains unutilized with you. That unutilized credit which is with you, you can get the refund. That unutilized credit of the ITC, you can get the refund. Okay, sir. So this is under the first provision, without payment of the tax. And what are the input tax credits are available without utilization, unutilized ITC, you can get the refund. But for this scheme, for this first option, you have to execute a LUT, letter of undertaking. For this, you have to execute letter of undertaking. Okay. Once you execute the letter of undertaking, then you can export without paying of the tax. And what are the input tax credits are remained unutilized, that part of the refunds you can get as an ITC refund. Then second option, you first pay the IGST, because IGST is applicable because it's the interstate transaction. Interstate transaction, when it is there, these exports are treated as interstate transaction. So IGST is applicable. IGST first you pay, and what of the IGST you have paid, the same amount you can get the refund. What of the IGST you have paid, the same amount you can get the refund. So these are the two options, as I told you. Accordingly, you can operate, means without payment of tax or with payment of tax. Subsequently, with payment of tax, you can without payment of tax, you can get the refund of the ITC. With payment of tax, you can get the refund of the IGST. Okay. Then for example, you are taking the first option, without payment of the IGST you want to export, then you have to take the LUT. LUT, who can take? Any person can take the LUT, but certain restrictions are there. Who is not prosecuted for the amount of the tax evasion more than 2.5 crores, then they are not allowed. Otherwise, all are eligible to take the LUT. Only those defaulters, means somebody prosecuted for the tax evasion of more than 2.5 lakhs, they are not allowed to take the LUT, but all others are allowed to take the LUT. LUT for only for the zero rated supplies only, means for exports or supplies to SEZ or SEZ developers. Okay, then only they can take. Then supplies to EOU, of course, not treated as an export. It is not a zero rated, not eligible. Then LUT is every financial year wise you have to take the new LUT. Financial year means April to March. Every April to March you have to take the fresh LUT. Okay. So this is how about the LUT. Suppose supplies made under the LUT without payment of the IGST and exports are not made, then what will happen? You have taken LUT and you have made an invoice also, but ultimately exports is not happen, or the consideration is not received, the payments are not received. Then whether this what will happen under this situations? Then the provisions are there. There one provision in the LUT, when you are taking and you are making the any of the transaction under the LUT, the conditions apply. Conditions apply means if you are not making the export within prescribed time limits, then you have to pay the tax along with interest. You have to pay the tax. The tax is IGST. You have to pay along with interest. You have to make. In case of the goods, within 3 months of that export invoice, whatever you have made under the LUT, within 3 months the goods supposed to be exported. If not exported, a spare of say 15 days is allowed. You have to make the payment of the IGST along with interest within that 15 days after the lapse of 3 months. After the lapse of 3 months, even within that you have to pay the this IGST along with interest. In case of services, 1 year period is given, and again 15 days grace period payment. Not made within 1 year that export, then after the expiry of 1 year, within 15 days you have to make the payment of IGST along with interest. So this is all the for the, that is the first option we are talking about. So here again summarizing both the options. Suppose you are making the zero rated supply, you have two options are there. Option 1, without payment of tax, and option 2 is on payment of IGST. And so you are allowed to take the ITC. As I told you, you are in both the cases, because in the first case the ITC is allowed, but it is not utilized. So there is a accumulated ITC is there. Accumulated ITC you can take as a refund. For that refund application separately you have to make. The second option, this IGST you are making payment, and while IGST payment you can utilize the ITC and adjust this ITC towards your IGST payment. Then whatever you have made the IGST, that same amount you can get refund. For the goods, of course, whenever you are making the export of goods, then there is no need for separate application, but the shipping bill itself is treated as an application for the refund. So you in the first option you have to make a separate application. In the first option you have to make a separate application, that is application number RFD01A. Okay, you have to make a separate application. But in the second case, in case of goods export, there is no need for separate application. But in case of the export to SEZ or the services exports, then you have to make a separate application. Otherwise, under the second option, under the goods exports, there is no need for any separate application. Shipping bill is treated as an application, and automatically that amount will be credited, the refund amount will be credited to your account, subject to conditions. Okay, clear, sir? This chart is very clear, I believe, completely summarized and given very precisely about availability of the tax, application of the tax, then your entitlement for the refunds, and the applications also I mentioned here. And provisions are made very clearly under sections. These are the sections of the IGST Act, and these are the circulars, basic circulars I mentioned here. Okay. Then some example I will tell you. Suppose you are making export worth of say 1 lakh Indian rupees. I'm after conversion I'm talking about. Say 1 lakh worth you are made. Suppose GST ITC you have taken, because you have taken ITC. That ITC breakup is like this. ITC total is 13,000, but breakup of 6,000, 4,000, 3,000 you have taken. Then under option 1, which we are making without payment of IGST, under LUT you are making without payment of tax under LUT. Then no IGST is paid, means only ITC refund is allowed. But ITC refund, very remember, ITC refund for what are the ITC you have taken 13,000. But what the refund is allowed on the capital goods, the refund is not allowed. Only on input and input services, the refund is very clearly you understand under the option 1, only for input and input services. But capital goods, the refund is not allowed. So you will get only 10,000 as a ITC refund, not 13,000. Okay. So this point here under option. Then option 2, with payment of the IGST. IGST, suppose you are paying 18,000, but ITC you are allowed now. So total 13,000 ITC you can avail, including for the capital goods also you can avail ITC. So you pay adjusting the ITC adjustment you made and paid the tax, and the fund you are getting here. But the adjustment of the ITC for the total 13,000 you can make. So this understanding you must have. Accordingly, which of the scheme is available, means advantage to you, you can take this advantage. Which of the scheme is available, advantage that you can avail, right? Suppose there is an exempted goods are there, means for example you are exporting rice or some of the agriculture items, vegetables, fruits, these are exempted items. So these exempted items whenever you are exporting, but on input, for example for packing or other things, item is exempted, but certain inputs you are taking like packing material or services like warehousing services, transport services, handling services, on which you are paying certain taxes, whether that ITC is allowed or not. As per the section 16.2 of the IGST, if you read very clearly, even though for the export of exempted goods, even though you have taken the ITC for this ITC for the packing credit, packing materials or services or other transportation on other things, handling, you are allowed to take the ITC. What are the taxes you paid for other inputs? Other inputs, these are called. These other inputs, whatever you have paid, and these tax you can ITC you can take. That is what the under the provision 60.2 of the IGST Act. Okay. The second option, as I told you, on payment of the IGST, here no separate application is required, as I already told you, no separate application required. And also as per the details of the relevant export invoices contain the form. Means that filing of the returns is very essential for getting the any of the refunds. The returns of the IGST returns you have to make. Here in the second case, you have to make the returns. First return is about the GSTR 1. In the GSTR 1, on the table 6A, you have to file the export related invoice, shipping bill details you have to mention, and it's the values and taxes and other thing also you have to mention. Also you have to furnish another return, that is GSTR 3B. So GSTR 1 and GSTR 3B returns must be filed on the GST portal. Then the data will be transmitted to customs portal, that is customs EDI, and customs EDI has to confirm whether the exports are happened or not, because you are making the claim that you are exported under this returns. Whether it is exported or not, that customs portal will verify. And after the shipping bill, means that shipping company also, shipping lines, they had to file the EGM, means export general manifesto. Then the customs portal will confirm that it has been exported, then only the refund process will start. Okay, otherwise you will not get any refund. So now we are talking about some deemed export provisions also. Suppose you got certain items from the Indian supplier under the advance authorization or EPCG scheme or any other scheme. For example, you got certain deemed supplies are made, means you are procured, you are an exporter, but you are procured from the Indian supplier. He has taken certain facilities of the deemed export benefits he has taken, for example. In such cases, whether the refund of ITC is allowed or not, the question arises. So they have clarified from this rule, they have clarified that refund is available, but not for these items. Which items you are getting from the deemed supplier, deemed export supplier, these items you will not get the refund, but other items you can get the refund. That other items are very important. Suppose you are a manufacturer of, say, certain item where some chemicals are required. For example, you are got the supply from the chemicals from a domestic supplier. He has taken the deemed export benefit, for example. Okay, for the chemicals, whatever you are purchased, for that you will not get any ITC refund. But what are the other items? For example, you have procured certain packing material or other consumables, other raw materials. For that items you can get the ITC, but not for the deemed export items which you have got from the supplier. Okay, then what is the deemed exports also we can discuss. Deemed exports, as per the foreign trade policy, they are defined under the this section. Deemed exports means goods which are supplied do not leave the India. Means the supplier is there within India, and he is supplying to an Indian other buyer. So the goods are not leaving outside India, but leaves are not leaving India is one of the conditions. Then payment received either in Indian rupees or convertible foreign exchange. Either of these allowed, either Indian currency or foreign currency. Then goods are manufactured in India is very good condition. Only those items are also treated as a deemed exports. Not just you got certain items from the China, as a trader you are supplied to some Indian exporter, that will not be treated as a deemed exports. The goods are manufactured in India is a very basic condition. Okay, then under the customs means the GST provisions, what is it treated as a deemed exports? Okay, deemed exports under GST, these are the four suppliers only treated as a deemed export. Who? The advance authorization supplier, means they who has been holding the, means you are supplying to the advance authorization holder who is in export. Means I'll explain here again clearly. Suppose one is advance authorization holder, means you are an exporter you are an exporter, you are supplying to the, you are the supplier, domestic supplier, sorry, you are domestic supplier, you are supplying to the advance authorization holder who is making exports. So this is the deemed export for you. Deemed export, you are a domestic supplier, you are making the supplies to a advance authorization holder who is an exporter, but you are not an exporter sending outside India, but you are a deemed exporter. Okay. Similarly, if you are supplying items to EPCG authorization holder, then also it is treated as a deemed exports. Okay. Similarly, if you are supplying to EOU units or EHTP, STP or BTP units also, then also it is treated as a deemed exports. Okay. And also in certain cases, like in case of the gold and jewelry, for example, the bankers, they are the public sector undertakings are there, they are making the supplies to the this jewelers. So whenever you are making the supply to the bank, the public sector banks, then also it is treated as a deemed exports. Okay. So deemed exports, the domestic supplier must be registered person, he must be registered. The deemed export supplies are not treated as a zero rated duty, means zero rated supplies. That is very important. The deemed exports are not deemed exports, is not exports actually. It is a deemed exports within the country you are supplying to another supplier who is in turn exporting. Okay, but you are not exporting, right? You are only like a supporter of the exporter, right? So therefore, zero rating, it is not treated as a zero rated supply, and the supplier such charges GST may opt for the refund. First, you have to make the payment of the GST. The deemed exports, whenever you are making, there is no exemptions are available, but only refunds are available. So there is no relief, tax relief. First, you have to pay. First, you have to pay the tax and then get the refund. First, you have to pay the tax and get the refund. Who can get the refund? Either of them you can get refund, either the domestic supplier or the recipient also can get the refund. Only one you can get, either the domestic supplier or the recipients, they can get the refund. Okay. And once this refund is there, suppose a domestic supplier is getting the refund application, then he has to get the no claim certificate from the recipient. Suppose the recipient is getting the refund, then he has to get the no claim certificate from the domestic supplier. Okay. So this is the mandatory requirement. Okay. So when now the deemed exports under this provisions, as I told you, this means either the EOU making the supplies, means this is under the EOU and nothing, or advance authorization holder or EPCC holders are exporting. Under the deemed export supplies they got and then exporting, then the first option only they have to operate. Their second option is not available, for the simple reason the exporter is getting deemed supplies. When the deemed supplies are allowed, then the deemed exporter is getting the refunds, then there should not be duplication of the refund. Therefore, the second option is not available, means on payment of the GST, taking the ITC and taking this A is not allowed. Only the first option only you have to go with. Only first option you have to go with. Okay, means you have to make the payment without payment of the tax, only IGST, under the LUT only you have to export. Okay, clear, sir? So again, that restrictions, as I told you, under the second option. Second option, suppose you are exporting but you are taking the inputs from the advance author under the advance authorization, or you are taking the certain inputs from the for the EPCC license, or you are a EOU unit. In such cases, the second option is not available, means with payment of the IGST option is not available. You have to make the export only under without payment of the tax under the LUT only you have to export. The merchant export provisions, of course, I will discuss when I coming to the another session. Then especially for the merchant exports, how it will happen, I will explain. There also the merchant exporter also not allowed to take the second option. Okay. Means again to summarize, this is like summary. Suppose you are not claiming any exemption under any of the aforesaid notifications, means under the advance authorization or EPCG scheme or EOU scheme you are not taking, then you have the option, either of the options you can adopt. There is no restriction. Either you go for the first option, that is under LUT, or the second option on payment of GST and get the refund. Either of the options you can get. But when you are claiming any of the benefit under this one, then you are not allowed to make the second option, only first option you have to go. But for example, you are taking the notification under the advance authorization, for example, but only BCD you have paid. Only BCD means basic customs duty you have paid, but IGST the basic customs duty you have taken exemption, but IGST is paid, for example. In such case, of course, you can take the either of the options, either second option also you can go. But this is the condition, means IGST must be paid when you are importing any of the items under the advance authorization. At the time of the import, if you made the IGST payment, then your exports you can make on either of the option without payment of the tax under the LUT or on payment of the tax of the IGST. Either of the options you can avail when you make the IGST paid. But otherwise, if you take both the exemption of the BCD and IGST, then of course only first option only you have to make. The second option is not available. Okay. And for the refund, for example, any of the refund tracking also available. You can track this under the system. IGST you can go. IGST is nothing but is a customs a portal. This sometime back I explained to you. IGST. This is the customs portal. There under this link you can go to through, and with your credentials you can put the inputs, log in. Then you can track your status of the refund. Suppose in the refund that indicates, that code indicates like this, SB 000, then your refund is successfully processed, and in due course you will get it. Successfully validated means verified. That is what the verified, successfully verified. Suppose it shows SB 001, that means invalid shipping bill. Means whatever you have provided the details in the GST portal about that is GST 1, I told you under the table 6A, and the returns GSTR 1, you have to make the export related all the documents like invoice value, and shipping bill and shipping bill value. All those things has to mention. If you are whatever you have mentioned is not tallying with the customs portal, because the customs portal you are making the shipping bill application, is the shipping bill to the customs portal, then both has to match. If there is a mismatch is there, then for example shipping bill related any of the mismatch is there, then it comes the reflection of SB 001. Suppose SB 002 it is showing, that means the EGM by the shipping bill, means export general manifesto, is not filed by the shipping company. Suppose SB 003 you have made, that means the GST number is mismatching. Whatever the GST registration number you have mentioned, that is mismatching. And SB 004 means records already received, and it is under the A and validated. Okay. And SB 005 means invalid invoice number. Invoice is not matching. Any mismatch is there, like this it will show, right? So invoice mismatch, this shipping bill mismatch means SB 001, and invoice mismatching means SB 005, and SB 006 means gateway EGM is not available. There are two type of EGMs. One is the means suppose you are making the export from the ICD, Then from when it is received, means left from the ICD, then that IGM has to be filed. Then another one is from the main port, when it is leaving. Gateway port means main port. For example, JNP port or Mundra port, it is leaving the country. That's the main EGM. So main, that is gateway EGM. If the gateway EGM is not filed, then it comes to SB006. So these two things you have to understand about the mismatches. Okay. So therefore, the essentially you have to remember one thing is, whenever you are making the export, the choice you have to select accordingly, either first option or second option, with payment of the without payment of the tax under LUT, or with payment of the tax and then claim of the refunds. Okay. And the refunds, always you have to see in the first option, you have to make the separate application. In the first option, which are under LUT, when you are opting, then you have to make the refund separate application. ITC refund you will get. And the second option, you will get the IGST refund. For that, there is no need for any separate application. But whenever you have made the means either of the cases you made the export, then you can take the status also, you can verify at this link, and in this link these are the reflecting. Accordingly, you can understand if any mismatches are there, then you have to try to amend that mismatches in the next time returns. The GST returns when you are making, you have to rectify those returns. Returns. Only when it is matching, then you will get the refunds. Both the GST refund returns as well as the customs portal related documents which you are submitted, that as shipping bill for example, those has to be matched. Both the customs portal and the GST portal has to match, then only you will get the refunds, otherwise you will not get the refunds. Condition for refunds and other thing we have discussed, and some other conditions I'll tell you. Refunds must be claimed within 2 years. That conditions are within 2 years you can claim the refunds. Okay. And 2 years, how it will be effective for the export of goods? The 2 years means from the date of the goods are leaving India, that is the date. From that date, 2 years. For the services, when you are receiving the payment, from that date it is 2 years. Okay. And of course, you no ITC refund if goods are not are subjected to export duty. This is also one of the conditions. Suppose I told you in the first day, some of the exports subject to duty. For example, iron ore, those are subject to duty. When there is subject to export duty, then no ITC is allowed. No ITC refunds are allowed. Okay. Then ITC refund can be claimed even for nil rated exempted goods also, because even though the finished goods is exempted, but there are certain other raw means input stage items you are taking, like packing materials and other services where the taxes you have paid, that ITC is allowed. That is what the meaning of it. Okay. Then ITC refund and duty drawback can be claimed simultaneously. Again, here very clear they mention the ITC refund and duty drawback can be claimed simultaneously. There is no such objection. Their circular is very clearly mentioned about this is the circular. Okay. The net ITC does not include capital goods. I also explained you under the option 1, when you are making then ITC refund only for the tax, input and input services. Those two only we are considered as an input taxes. So those ITC refunds only you can get, but not on the capital goods. Okay. And the goods are wide to the notification so on. So that's okay there. Okay. That interest rate, if it is beyond certain period, suppose your refunds are not cleared within the 90 days period, then you will be getting certain interest also at 6% rate. Okay. Okay. Tracking refunds also, I told you how to track it. Already we have explained to you. And SEZ provisions, little bit we will discuss. SEZ, as I told you, it is under the separate act. It is under the separate act. SEZ is a separate act. that is 2005 Act. So we will discussing here mainly provision supply from DTA to SEZ. DTA means domestic tariff area, means other than SEZ, all other Indian part of the country is all the other things are called DTA. Okay, so DTA to SEZ, what is the provision, how to treat, then SEZ to DTA, DTA to SEZ, and SEZ to DTA, and SEZ to SEZ, and SEZ to outside the country also we will discuss. Those are the things we will discuss so that we can understand about the SEZ provisions. Okay, as I told you. Yes,
One
sir.
question, sir.
Yes,
Sir, with under one umbrella, one pan, under one pan, one EO, two EO is unit one, unit two is there. EO, export oriented units.
Yes, sir.
Okay, supplying one unit to another unit, is it required to pay GST?
So that is what all these things we are going to discuss now, sir. I told you SEZ to SEZ, then SEZ to DTA, DTA to SEZ. All these things one by one we'll discuss now. Okay, sir. So all these things I explain to you. Nothing to worry about. Okay. Then you see SEZ Act is talks about supplies to DTA to any of the SEZ. It is treated as an interstate transaction. Interstate transaction. Okay. So therefore, what are the taxes, if anything applicable, that will be IGST. That is what is the interstate transaction. Okay. DTA to any of the SEZ, suppose you are making the supply, this DTA to SEZ, this supply is treated as an export, subject to condition again, only authorized that supplies only taken, means SEZ when you are taking the registration, then the concerned the development commissioner, they will give the list of the items. The list of the items you have to very clearly see whether it falls on the list of the items, then those items you are supplying, DTA supplier, then those are called authorized supplies. Only for authorized supplies only those items are called as a means export. Otherwise unauthorized items, suppose anything you have supplied, then those are not treated as an export. For example, from DTA to you are supplying some food items to SEZ, eatables like tiffin, meal, and other thing you are supplying. Those are not treated as an authorized supply. So therefore, for that supplies, it is not treated as an export. What is treated in export? What are those authorized items only, which are there in SEZ at the time of registration? They'll give the list of the items which the SEZ is entitled for the importing or getting from the domestic tariff area without payment of tax. Those only items, if you are supplying, DTA unit supplying, then those are called as an export. Okay, means zero rated supplies. Okay, the SEZ is treated as a foreign territory. SEZ is treated as a foreign territory for all concerned about the taxation. It is India only, within India only we are talking about. But for the practical purpose, for the transactions of the taxes, for the purpose of the taxation only, it is treated as in a foreign territory. Okay. And whatever you are supplying, it is treated as a interstate supply, as I already told. One is zero rated, the other one is interstate supply. Okay, these two things you have to remember when you are making the supplies to. Supplies to SEZ has two options, as again I told you earlier, we have discussed without payment of the I means tax and with payment of the tax. Like two options are again available for SEZ also. Okay, these also treated as a zero rated and interstate transaction. What is meant by DTA? That is also they made a definition very clear, very clear. What is the DTA? DTA means what is not SEZ is all are DTA. What is not SEZ is all DTA. You see, but does not include the area of this SEZ. All are called as a DTA. That is a very simple definition they made it. Okay. Suppose DTA supplier, whenever you try to make the supplies to SEZ, then the DTA supplier must be registered. Whenever it is, because it's interstate now, the transaction is treated as an interstate transaction. Therefore, registration of the DTA supplier is mandatory as per the section 22 of the CGST Act. Okay, suppose the DTA unit is in Karnataka and they supplies to SEZ unit again in Karnataka, then whether the supply this is treated as a SEZ or means interstate, or whether it is a domestic supply, means means intrastate, means interstate or intrastate, that is the question arised. So in this question, there's a Karnataka High Court, there is two different judgments are there. These advanced rulings are there. One of the ruling that talks about the first ruling, for example, the hotel accommodation is provided, the service is provided to the SEZ. Means in DTA, the DTA supplier is a hotel. He is given a service to SEZ. Means SEZ, some of the employees or the guests have come and stayed in the hotel in a DTA. That is the case. Whether this supply of the services within the same state is treated as a export service, whether it has to be charged with IGST, or whether it is treated as a intrastate like CGST and SCST has to be charged. That is the question. There they defined hotel accommodation restaurant services being provided, being provided by the applicant within the premises of the hotel to the employees and guests of the SEZ cannot be treated as a supply of goods and services to SEZ unit in Karnataka. Hence, intrastate supply and are taxable accordingly. This is not treated as a export. It is not treated as a supplies to SEZ, because these are means hotel related services, restaurant related services. So these are not treated as a supply of the goods and services to SEZ. Therefore, the tax is applicable now. The tax is like SEZ, CGST and SCST, CGST and SCST, that is the intrastate transaction only it is treated. That is what the judgment is given by this. But contrary to it, there is another circular is made subsequently. That circular is entered contrary to this. The government circular, that is the GST circular is mentioned. That is entirely circular. And also another advanced ruling is there, whether the accommodation service, again here also the accommodation service proposed to be rendered by the applicant to SEZ units are liable to CGST, SCST or IGST. This is the question again. Here in this case, that advanced author means ruling is given, since the accommodation service supplies to SEZ are covered under the IGST Act, and the same can be treated as a zero rated supplies. It is treated zero rated supply, and invoice can be made without raise of the tax under the LUT also can be done. That is what they given. Means they treated this as a export, because service what are the supplies you made to SEZ is treated zero rated. So zero rated is treated in this case. Means different rulings are there. One ruling they're telling it is not an supplies to SEZ, so therefore it is not treated as zero rated. Therefore you have to pay the tax as applicable like not domestic supplies only. But in the second ruling they made it is treated as a means it supplies to SEZ is treated as zero rated. Therefore that exemption like under the that's first option under the LUT you can supply without payment of the tax. So that is what the options are there. That is what the different rulings are there, different and another ruling also like that is also come, that is also again contrary to that other rulings. And also the government also given a circular, that is also another contrary to the rulings. But ultimately what you have to take the decision is conclusion I'm telling you. Whenever you are making any of the supplies from DTA to SEZ, you have to see whether these are there in the authorized list of items or not. If those are not authorized items, then these are not treated as zero rated. Very simple conclusion. Suppose you are making from DTA to SEZ supplies. If the supplies are within the list of authorized list of the SEZ, then those are treated as a zero rated. Then you can take the under LUT also. Otherwise, it is no. Okay. Then about the registration, suppose a DTA unit in AP and the SEZ unit also in AP. Then both the units are there. One company. That is what I am coming to your questions now, step by step. Suppose one company is there, but two units are there, same state, in the same, for example, Andhra Pradesh. One is DTA unit, another is SEZ units. In such case, whether one single registration, GST registration is suffices or two registrations are required. Very clearly under the provision, first provision to Rule 8 of the CGST Act, CGST Rule 2017, it very clearly talks about two registrations are required. Two registrations are required, separate for the DTA and separate for SEZ. So two registrations are required. Then DTA turnover less than threshold limit supplies to SEZ. In such case, the registration is required or not. So DTA supplier is, say for example, less than 20 lakhs threshold limit, the turnover. When he is making the SEZ unit supplies, whether he has to register or not, because this supplies to SEZ is treated as a interstate transaction. Therefore, the DTA supplier must be registered. He must be registered because these are interstate transaction. Okay. This is under the section 24 of the CGST Act. Then supply to SEZ suppliers are developers. Then now we are talking about a DTA supplier is made and he has supplied to SEZ unit or SEZ developer. Then these are treated as a zero rated, as already I explained to you. Then the DTA has two options. One is the without payment of the tax under LUT, or the second option, he can make the payment on the payment and claim the refund. ITC can be adjusted and refund can be claimed of the IGST refund. Means like two options are available, like earlier I shown to you, same like two options are available. Subject to here again condition, those supplies must be as per the SEZ, that authorized list of items. If any it is out of the authorized list of items, then this zero rated supply is not available. Okay, this treatment will not be treated. Okay. Then supplies to SEZ refund also available. As I told you, both the refunds. First option ITC refund, the second option IGST refund. Both the refunds are available, but you are supposed to file the returns also. Form GSTR 1 and valid GSTR 3B must be filed. And in this table 6B had to given in the GSTR 1. The supplier, that means a DTA supplier, he has to file the returns. In the GST return, in this table 6B, he has to provide the details of the supplies to SEZ, and also he has to file the the GST 3B also. Okay. And authorized operations only, again I'm repeating, only those authorized operations only that will be treated as a zero rated. For that only you can take the refund options, otherwise you are not allowed. Okay. Then supplies from SEZ to DTA. DTA to SEZ you have discussed. Now SEZ to DTA. SEZ to DTA, for the purpose of the DTA, from the point of DTA, it is treated as an import. SEZ, as I told you, is like a foreign territory. SEZ is like a foreign territory. You are importing from the foreign territory to DTA units. So SEZ to DTA, it is treated from the angle of, from the point of view of the means DTA, it is like import. So all the import duties, what are the applicable, he has to make the payment of the duties, like basic customs duty, then IGST, then social welfare service tax, then if any anti-dumping duty or countervailing duties and the safeguard duties also there, that is also has to be discharged. Okay, because it is a simple taken as an import. Okay, then supply from the SEZ to SEZ. Okay, SEZ to SEZ, whether these are treated as a means interstate transaction when zero rated, or it is out of country to out of country, then at all that taxes is applicable or not, that is the question. There are two views are there. Some of the people viewing, because SEZ to SEZ is treated as a zero rated, because any supplies to SEZ is zero rated, so SEZ to SEZ also treated as zero rated. But some other view is, that is most prominent view, is SEZ is outside the country, like, and both the SEZ also like outside the country for the treatment of the taxes. Therefore, from the outside means outside the country to country, it is any transaction happened, then Indian law will not be applicable when GST is not applicable. So it is treated as a neither goods neither services, like it comes under Schedule 3. So therefore, these are not treated as a either exports, or it is not import for the other year. So it is not treated as one SEZ is not an export, the other SEZ is not an import. These are neither treated as a import or export, because it is from the outside country to outside country. Therefore, the GST Act, under GST Act, it is neither goods neither services. Okay, so that is one of the view we are taking. Then returns filing we are talking about. Returns filing, when you are talking about by regular taxpayer, means the supplier, for example, he has to file the GSTR 1 in the column 3b. In the column 3b, he has to mention about the supply of SEZ, that invoice details and other details you have to mention. Invoice along with values and other taxes and other things you have to mention. And also GST 3b also you have to mention, and the column 3.1b, outward taxable supply zero rated, he has to mention. Okay, and for the SEZ players also, they had to file again returns. The SEZ also, the SEZ taxpayer, he has to file the GSTR 1 return, and he has to take this one in the table 4A. Okay, and the supply of goods without a bill of entry and with bill of entry, both the options are there, but both the cases they has to mention the details in the GST 1 and GST 3b. Okay, so these returns has to be filed by the both the supplier, means DTA supplier to SEZ and SEZ supplier to DTA. In such case, SEZ also has to be filed the returns. Okay, so again, the refunds also similar like earlier cases I told you, but here the separate application has to be made. For the returns, we have to make the RFD 01A, that refund application you have to make for the getting the refunds. Who will get the refund? Only the DTA unit will get the refunds, not the SEZ unit. SEZ unit is not allowed to take any of the refunds. The supplier who has made DTA supplier who has made supplies to SEZ, the DTA supplier has to claim the refunds under the form GSN is RFD 01A. Okay. Then ship to this provisions also applicable. Okay, this will be okay. E-way bill provisions also I will come later, and I will explain you. E-way bills, whenever the like any of the other supplies like above 50,000, E-way bill is a mandatory requirement. Though even though you are making the supplies to SEZ, as per the provisions, that E-way bill has to be made. That is a mandatory requirement. E-way bill, again, when I'm coming to there's a documentation provisions, then I will explain about the E-way bills. But SEZ supplies also you have to make the E-way bills. Okay. Okay, sir, with this today's session, we are going to wind up. And tomorrow, of course, we are going for some other practical aspects also we can discuss. I will show you also some of the practical aspect how to go about, and I will sending to this that India Trade Portal. So I had to make the practice. Tomorrow you come comfortably with practice. If any doubts also there, we can clarify. More you practice, then only it will be helpful to you. You can get the understanding how to means get the various details. Everything is available in the system, but where it is available, how to get the details, all that has to be understood. How to, where to make the applications, that is also you have to understand. Okay, so that is how with this today's session we are going to wind up. Any questions are there, you can raise. Otherwise we are closing the today's session.
Sir, kindly, my humble request, these PPTs, can you
Yeah,
share?
sir, I told you, no, sir, some of them definitely will share, sir, once the
Some of,
subject courses are
not
over.
all, huh?
All are some are the things are not useful to you, not for these provisions, but what are the I'm covering, those things I will share to you. Okay,
If it is
what are
highly helpful me, if you are sharing the
that
all
is,
PPT from day one class, every
sir,
class it is.
that is what I'm talking to you. I'm again repeating, whatever I have been covering, I will share to you.
Okay. Okay. Thank you, sir.
Okay,
Thank you.
okay, sir, thank you, sir, thank you. Okay, we are closing now the session.